Good morning. Today is Tuesday, August 6th, and I want to start off with Netflix, NFLX. If you recall last week, now there's a lot I want to go over here with you, okay? Remember last week we went long, and I outlined it yesterday. We went long last week at a price of $247.55. $247.55 right over here, okay? So we were in this trade 1, 2, 3, 4, 5, 6. Yesterday, okay, we got stopped out almost to the penny, all right? Got stopped out right here. Remember the stop loss? We moved it up. If we didn't move it up, and if we had just left it where it was originally at, okay, it was originally at 240.61 was the initial stop, and I ended up moving this stop up to 241.61. The market traded down to 241.38. Knocked me out almost to the penny, okay? Very frustrating, but let me tell you what I did. Since I am a day trader and I'm here all day watching the markets, day trading, managing my swing trades across all markets, I was day trading the E-mini S&P, so I flipped to the Netflix, saw that I got stopped out. Flipped to Netflix while I was watching the E-mini S&P 500, flipped it to a 5-minute chart, and I'm going to show you exactly what I did, okay? So I saw that I got stopped out. Look, yesterday Netflix opened up right in here, right? Traded down, knocked me out right in here. Okay, the trade that I'd been in for 6 days got knocked out right in here. Then I saw on a 5-minute chart, the low of the day created an inside pattern, right? The high was lower than the prior bar's high, and the low was higher than the prior bar's low. Okay, so what if I'm lucky enough to be switching to an intraday chart while I get stopped out on a swing trade, if I see a good trade setup based on an intraday chart like we got right in here, again, look at that. That high was 242.36. The prior bar's high was 242.40. So the high was, in fact, lower than the prior bar's high. The low, of course, was higher than the prior bar's low. Again, I want to outline this for you. What I decided to do, I did a really... I thought it was a good thing here. I got right back in. Remember, when you get stopped out of a trade, if you see something and it forces you to maybe get back into the market based on another reason or a smaller time frame, if in fact you've got the time and the inclination to do such a thing, then you can't hesitate. Just because you took a loss, you can't get you can't get upset and cry over it, right? You need to get back in if it calls for it. So yesterday created that inside pattern. Look I went long right in here as it took out the high of the prior bar, right? 20 cents above that high. 20 cents above 242.40 is 242.60. So I went long at 242.60. My initial stop loss was 20 cents below the low of the day, right? The prior bar to the inside pattern. That low was 241.38. Remember, I got stopped out at 241.61 with a little slippage, in fact. Market traded down to 241.38. So my initial stop loss on this, okay, my initial stop loss was 241.18, 20 cents below the low. So look at my risk on this trade was $1.42. And as you can see, the market took it out, the high right here, got me long, right? Pull back a little bit, never took me out. And this was rather early in the morning, too. It bottomed out at about 10:15 in the morning. Market rallied right up to this high. As you can see, the bars changed from red, which denotes a downtrend, to green right in here. Okay? But look at the market took out this high here. On that rally, the market took out this high, carried over from Friday. Not only that, the market penetrated up through both the 200 exponential moving average and the 50 exponential moving average. Okay, so we penetrated through both of those moving averages, saw that mid-Kiltner there, that's a 16-bar exponential, crossed up through both moving averages, took out this high, took out the 200 and the 50, and the bars turned from red to green right up in here. So at that point, I knew I wanted to stay long this market. So the market pulled back. I still had the position on. Market turned, it bounced, and really started to rally. And we started pulling outside of that upper Kiltner band, which showed me momentum. Okay? And so what I decided to do is I decided to close the trade up in here. Okay? Right before the close, because it was in fact a day trade. I didn't want to carry it overnight. Okay? So let's just see what happened here. Let me show you exactly, tell you exactly where I got out of this trade. I got out of this trade at 252.63. All right, so I got out at 252.63, entered this market at 242.60. So on this trade, made $10.03, and that was a day trade. That was a good trade, a very low risk trade. Initial stop loss. Again, I was risking $1.42, and I ended up not taking any profits, but just trailed the stop up. Okay, trailed it up, and ended up making $10.03 on that trade. Remember, okay, now. The 6-day trade, the trade I had based on the daily charts. Remember, I went long at 247.55, stopped out, got filled at 241.43. I lost on that trade $6.12 on the trade that I had for 6 days. Lost $6.12 on that. Got stopped out to the tick. But luckily, since I am here during the day and I am, day trading and managing trades, I saw this trade setup and I got 10.03 back. So what did I net on this? I netted $3.91. And yeah, $3.91 is what I netted. So it was a good day trade. Hopefully, you learned something from this day trade. It was a great trade. So a lot of the things that I teach you off of daily charts or things that I show you, trades that I do. I mean, remember, the swing trades that I show you here on these free videos is just a small fraction what I do. I mean, out of maybe 20 trades that I have on, I'm showing you maybe 1 or 2 of these trades. And again, this type of trade that I did yesterday on an intraday 5-minute chart, again, I just happened to catch it as I was getting stopped out, and I was, trading the E-minis anyways. I flipped over to that. I was seeing that I was getting close to my stop. I happened to flip over to it quick, watch this set up as I got stopped out, and went in again as I saw a trade that I was only risking $1.42 on a stock that's trading $250. Very, very small risk. And the market, hey, let's face it, when you get a big run like this, yes, it's lucky that the market makes a run like that. It's not luck that you made money on the trade, but it is in fact lucky that the market stages such a huge move when you get in. So hopefully you learned something from this. Have a profitable day, and I'll be back with you tomorrow. Bye for now.